Now let's move this on to the weekly chart, and it's in a nice, beautiful uptrend. There's one red candle recently in here. There was three in a row here, and one, two, three, four, five. Very, very bullish. I'm not going to count the green ones, but it did have another up week this last week. But it's also the type of candle, if you take a look at it, it's almost like a stall or pause kind of candle. If anything, it gives you a little more energy needed to continue the rise higher. And within that week, it was definitely that of a correction when we've seen the price go down and then back up to the top part of its range. Within this trend, it broke above it. It's still holding above this trend line. And it's pretty much came down, or it has, depending on how you draw the trend, and some trends it has, found support at this level. And that can be enough again to fuel another decent sized candle higher for the next preceding week. That would be greater than any of the other big ones that you see on here. There really hasn't been that many massive moves when you look at this, at least on a logarithmic point of view. But most of them have come lately. It's been a spectacular ride towards the upside. And if you talk about energy needed for moves higher, when we look at this on the longer term time frame, it'll look better when we go to the monthly chart. But this is one big range consolidation. The range from roughly a little over 8 to around 20. And if we draw the length towards the top to the bottom and then match it towards the breakout level, then we've pretty much already reached where we were supposed to go if you use that as a price objective. And when you find these price objectives, especially the first ones or the conservative ones, you you expect there's a good chance it can still go beyond that. Now, that a lot of times that could mean very easily that it can come back and then rise towards the upside. But if you look at this chart and say, well, it's got to pull back, it's got to correct. Yes, you're right. It's got to correct either through price or through time. But at what time does it have to? It can go all the way up straight to 150 and then it's still going to have to correct. But what I notice is the longer that it takes going in one direction without much of a correction, the bigger the correction will eventually become. The only corrections we've pretty much had is in here. That we still need to correct a little bit more for this at some point, but as long as the market keeps going higher, then that means the corrections will also come at a much higher price. The next pullback could bring us back down to 60, goes to 110, then back to 60. There's a large correction. And then people down at 60 might be, I'm not going to buy it. It's going to go back down to 30. Oh, okay. It's up to you what you want to do. I mean, we've went through these different trend lines in here. And what I'll be doing in some other videos, and I've done this before, is take the rate of how many of these levels that you've taken out. A way I do this is I select a small portion and copy it, and then I can paste it onto an area like this. And when you break a lot of these different levels, that's on the uptrend anyway, it's bullish, and then bearish. Let me just continue going all the way because it's not going to take too long. And this can give you a guide for different upward levels or downward levels within a downtrend. And there we can see it's at an area where we are supposed to find resistance. Last time we did, but it was through time and it was short. Maybe the same thing will occur. Once again, if you use the theology that if a level that's supposed to be resistance isn't or is only resistance for a small amount, it oftentimes bursts through to the next one. There's the case again. If it's the same thing, same rule applies again on it bursting towards new levels. Now let's go on to the monthly chart. And it's in a spectacular uptrend again. It's going to take a lot to destroy this market. I've heard from Brian Shannon when the stock markets was falling. It's going to take a long time for this market to heal. As far as the shorts are concerned, same thing. It's going to take a long time for it to heal when it's ready to do so. And it ain't ready, in my opinion, yet, because this is looking pretty strong to have a move on the breakout of this level, sideways consolidation, and then upward moves again. As I was saying before, at the with the hourly chart, it's looking like it's going, or daily chart, it's going parabolic, either upwards or it's an intermediate term top. Because of this factor, these are when parabolic moves happen. A parabolic move wasn't going to happen too much on here. It might have started here, but no. A parabolic move is definitely not going to happen here. It wasn't going to happen here. That was only breakout, but it can easily happen now based on its current direction. As far as some trend lines are concerned, I think if we connect, let's see, what should we connect? Let's do this one in here. That's not a trend line. Let me fix that up. That's a different squiggly looking line, I guess. This was a support level from 2009, and then you match it up. People ask me, why do you use parallel lines? I don't know why, but it seems that whenever you're in a trend, it's going to work in a parallel level like almost 100% of the time. Don't know why, but it does. Close to 100. And we just paste it again. Didn't work there. Maybe I made it a little too narrow. Once again, we can draw an upward trend and just see where it goes. We're going to have to draw another one. We can tell that right now. And it found resistance. Very perfect. We can even move it out, down this way and see that it was also a level of support. We'll paste it again and see where the next one takes us. And this is a very nice little technique because this allows me to have the same rate of ascension as before and the same distance percentage-wise top to bottom. And this was a nice little area for resistance amongst here. And when we look at this, there's a lot of upside room potential. It had a quick burst up to this level. It's pretty relevant that it hasn't found support yet. A resistance, both for that matter. It didn't find resistance roughly around 40 something. And it's right now, the top of this trend is like 60, 65. It's getting up there pretty good. If we get close, then I'll calculate the exact number, but we have a decent ways to go on that one. Now, as far as the quarterly term time frame is concerned, this is a super duper long-term chart. A little smiley face, and it's a nice looking smiley face. Pretty much back to its previous resistance level. Now, on a normal level, like if you look at this on a 1 minute chart, or this is a week, you would think, okay, we're at an area where we recently found resistance, we got to pull back. There's not as much price memory as far as actual people buying and selling because they're back to even. For example, I don't think there's going to be any people who shorted here that are going to cover here because they failed to take their profits. But more so for the people that bought in here, a lot of them have either already sold at some point during this rally, or they're not planning on selling until a decent amount of time from now because they know what's going on. The community of people into silver, because they don't have faith in currency, is not going to sell it for any of these gains that have 2 digits beside the decimal. And for some, not even 3, and some need the first digit of the 3 numbers before the decimal to start with a 4, a 5, or 6, meaning 400, 500, 600 sort of deal. Overall, again, picking tops in this market, it's like picking tops in here. I mean, it can be the top. You can say, oh, I picked the top here. And if you happen to be right, then you happen to be right. And if you keep on calling tops, you're going to be right the final time, and you'll be wrong pretty much all the other times. However, if you did pick tops there and you shorted here, or covered your shorts here, these would have been correct and these would have been incorrect type deal. There's not much more for trend lines. I already stated that there's really only one trend line on this chart that I need to see it get above, and it's really this one in here that's getting close, still not quite there. Also, if you take a look at the fundamentals mixed with technicals, we're back to the $50 level from 1980. It's pretty safe to assume that over 31 years there has been greater than 0% inflation. You know, one of two things is happening. Either A, it was manipulated down for some reason, reasons not important, or B, it was because the supply and demand has destroyed silver. There's way too much of it in comparison. It's not used as much in comparison, and so on and so on. It's pretty obvious what the answer to that happens to be. Now let's switch this over to, actually I want to show this one chart in here now. It's a price memory chart. What this does is it it gives a tick every single time a price finishes within a certain level, either at the daily close, the highest point it's seen that day, as well as the lowest point. This is since the breakout began in 2010. And it's designed to go up 10% with each level. So 20 to 22 is 10%, and it's in or around 10 or in and around 10%. Maybe here the 43 to 47.25. That's 4.25. That's a little under type deal. Still around the same area. Originally, it had about 50, 55 hits on the first three, going from 20 to 26. The largest two are from 26 to about 32. That's the area in January where it consolidated for quite some time. Then this last little area was from 32 to 39. And it had pretty much the same as it did in here. But now we're seeing a little pattern here where either A, it's going to have to correct again from as far lows down as even like 40, 41 to make this one go higher, and even 43 to 47. And it can very soon go to the next one, but overall we've been in this one long enough where it could hit the next one. I think that's the easiest, best thing, or the only thing I want to say about that, because there's really not much that you can do, I think, with that anyway. All right, now as far as gold is concerned, let's start off with the daily chart. And can you see the trend? I mean, you gotta see this on a logarithmic to see it. You might find other ones on a linear. How simple is that to see? If we do a parallel line, like I say, they just usually happen to meet up, which means most likely, where are we finding resistance? You guessed it, wherever this top happens to be, that's where I would guess we're going towards. It's got a nice little breakout pattern occurring. You got this consolidation through time after it had a nice run up. It's had a decent amount of time to consolidate. Definitely has room for legs to go higher. Maybe it needs to pull back a little bit, but maybe it doesn't either. Just because you're supposed to find resistance doesn't mean that you necessarily always will do so. On the 9-day chart, it means each candle represents 9 days. I don't know why people keep calling this a bubble. I really, really don't. This is the original trend line. We're still below 1,000 on this trend. Obviously, no reason to even consider that to be a possible trend now. If we draw a parallel line to the significant resistance, there we go. Resistance becomes support. We'll do the same thing again by copying, pasting, and then what we'll do is we'll get the exact same rate of ascent and the exact same price increase. An area of resistance pierced above it in here, and then technical analysis 101. Resistance comes back for higher low, breaks above it, finds support, liftoff. There's technical analysis 101. Another one. What do we see here? We see technical analysis 101. Resistance, pullback. Finds a little bit of resistance here. Finds support here. Resistance. finds a higher low, breaks above it, breaking out, may find support, then lift higher, may not find support. Where are we going to again? Well, we'll draw yet another line because that's most likely where the resistance should lie on here. You know, I'm not going to draw it exact. If you're looking to find this out, you can find out what the rate of increase is from line to line, and then you can just increase it by that percentage. Either way, that brings us up to 1787 or so, depending on when it hits. So that's got a little bit, that's a pretty nice size up target to say the least. And also when you see this, another thing that this tells you is that the rate of ascent keeps going up, basically. Because we can draw another trend line that connects from this low where it pretty much broke out and connect as many points as we can. Draw a parallel trend. And there we go. Same thing. This one's even higher than the 1787. This one will bring us past 2000. So maybe we come up to this area, pull back a little bit, and then break above it, find resistance at the past trend line, and then boom, off to this level. It's a possibility. This is long-term stuff. This is a 16-year chart. All right, now as far as the ratios are concerned, and then I'll finish it at that. Let's just take a look at it on over the last so many years. It's pretty much a crash, to say the least. Support here at 40. It really didn't find it. It was supposed to be a little bit of support here. No, it went below it, pretty much found resistance, and then went down faster. Just because an area is supposed to be support or resistance doesn't mean it always will. But I think the secret is if you're going to be going long in a chart like this and you're seeing it break down, are you going to stay in as it's breaking down here? Because obviously support that was supposed to be didn't happen. Alrighty then. Another thing to say about this is this historic ratio is 16:1. It seems to me that based on the numbers of like inventory, production, and that sort of deal, that it's about a 10:1 kind of deal. And if you look at real supply and demand based on its uses, it could even be a 1:1 sort of ratio if you look at true value. But price is the only thing that pays. Just because you believe it has fair value doesn't mean that you can trade an ounce of silver for an ounce of gold. That's why price only pays, but price is going lower.